What's up everyone, and welcome back to Explain the Charts. Today, on November 24th, 2025, we are taking a deep dive into Intel Corporation, ticker symbol Intel. There has been an incredible amount of news and volatility surrounding Intel and the entire semiconductor sector lately, so we have a lot to unpack. First, let's cover the current events shaping the narrative around the stock. The sentiment is decidedly mixed. On one hand, there is huge enthusiasm for Intel's exposure to the AI sector, which has fueled a massive rally in recent months. However, this is tempered by growing fears of a wider AI bubble, which caused a significant market downturn on November 18th, hitting all major chip stocks including Intel. Compounding this are Intel's company-specific issues. While its client computing and data center segments are performing well, the Intel foundry business, a cornerstone of its future strategy, is facing significant difficulties and reporting substantial operating losses. Furthermore, Intel is battling serious allegations of trade secret theft involving a former TSMC insider, which is creating jitters across the global chip market. Analyst ratings reflect this uncertainty, with Zacks giving it a number 3 hold rating and noting that while current year earnings estimates are up, projections for the next fiscal year have been revised downward. So we have a classic battleground stock, massive AI potential versus significant fundamental and legal headwinds. Now let's see how this dramatic story is reflected in the price action. Looking at the complete daily chart, we can see Intel has been on an absolute roller coaster over the past year and a half. There was a catastrophic drop in August 2024, where the stock was nearly halved in a single day, gapping down from around $29 to below $22. Following that event, the stock bled out for months, eventually finding a bottom and what is now a critical long-term support level at the 52-week low of $17.66 back in April 2025. From that low, a recovery began, but the real fireworks started in mid-September of this year. The stock launched an incredible parabolic rally, running from about $25 all the way to a 52-week high of $42.48 in late October. This explosive move aligns with the news cycle's growing enthusiasm for AI and represents an 83% surge that the Motley Fool highlighted. However, no trend goes in one direction forever, and we've seen a significant pullback in November. Let's zoom in on this recent action to get a better look. This focused view from September onwards clearly shows the powerful uptrend and the recent breakdown. After peaking at $42.48, the price has been making a series of lower highs, indicating a short-term reversal. The selling pressure intensified around November 18th, which correlates directly with the news reports about fears of an AI bubble. Then on November 20th, we saw a massive bearish candle, with the price opening near $36 and closing at $33.62 on very high volume, a clear sign of aggressive selling. The very next day, November 21st, the bulls fought back. The price opened lower, hit a low of $32.89, but then reversed strongly to close near the high of the day at $34.50. This candle, known as a bullish hammer or engulfing candle, suggests that buyers stepped in aggressively at those lower prices. This brings us to our key price levels. Immediate support is now the low from Friday at $32.89. If that level breaks, the next major support zone to watch is around the $29 to $30 area, which was a consolidation point before the final leg of the big rally in September. On the upside, immediate resistance is the $36 level, which was the breakdown point from November 20th. Above that, we can expect resistance near $38 and then again at the psychological $40 mark, before a potential retest of the all-time high at $42.48. Now let's switch to the hourly chart to examine the recent battle more closely. On the hourly chart, we can see the intensity of the sell-off on November 20th and the subsequent fight. The price sliced through the low $35 and $34 levels with very little hesitation. However, the buying pressure that emerged on November 21st is also very clear, starting right from the market open. The price established a base around $33 and ground its way higher throughout the day. This indicates that institutions may be viewing this dip as a buying opportunity, at least for the short term. To see that intraday strength, let's drill down one more time to the 15-minute chart for November 21st. Here on the 15-minute time frame, you can see the initial dip at the open, where the low of the day at $32.89 was established. After that, buyers were in control for almost the entire session. The price action shows a constructive pattern of higher highs and higher lows throughout the day, which is a very positive sign for short-term sentiment. The strong close near $34.50 suggests momentum is carrying over into the new week. This powerful intraday reversal is what traders want to see at a potential support level. So, let's recap and look forward. The key levels to watch are critical. Support is at the recent low of $32.89, with a more significant floor around $30. Resistance stands at $36, followed by the $38 to $40 zone, and ultimately the peak at $42.48. Let's outline the potential scenarios. A bullish scenario, which I'd give a 50% probability, would see the stock hold above $33 and reclaim the $36 level this week. This would be reinforced if the broader market stabilizes and if we get any positive news regarding Intel's foundry business or AI chip advancements. A break above $36 would suggest the pullback is over and the uptrend could resume. A bearish scenario, with about a 40% probability, involves a failure to hold the $32.89 support. A break below this level could trigger another leg down towards the $30 support area. This would likely happen if the AI bubble fears intensify or if there are negative developments in Intel's legal battles. There is a small 10% chance of the stock getting stuck in a sideways chop between $33 and $36, but given the recent high volume and volatility, a decisive move one way or the other seems more likely. Moving forward, keep a close eye on news related to the semiconductor sector, especially concerning demand for AI chips. Also, any updates on Intel's foundry partnerships and the ongoing TSMC legal dispute will be major catalysts for the stock price. Thank you for tuning in to explain the charts. Please remember, this is not financial advice and is for educational purposes only. Always conduct your own research and analysis before making any investment decisions. We'll see you in the next video.